San Ramon homeowners have a lot to be grateful for as we wrap up this year's market updates. I'm Tony with Clarkson Santoro, and this is our last weekly real estate update for 2024. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos, so you can know how the market is impacting your options as a home seller or buyer. As always, let's start off looking at how this week's market performed. There are currently 18 homes on the market, which is the same number as the end of last week. The average asking price of those homes was $2,052,000, down slightly from last week's average asking price of $2,169,000. 3 homes went pending, the same number as last week, with an average asking price for those pending homes down significantly from $2,631,000 last week down to $1,748,000 this week. 4 homes sold this week, much fewer than last week's 10 homes that sold, and the average closing price for this week was $1,762,000, down from last week's average sales price of $1,988,000. So now that we know how the market performed, we can take a broader look at the trends that help us determine where the market might be heading coming into the new year. Before we look at those trends, if you find this information helpful, you can subscribe so you don't miss out on future updates. And why not share this information with a friend also? Everyone deserves to be in the know about their local market. Okay, let's take a look at those trends. Starting with inventory. After several weeks of slow but consistently reducing inventory levels, we leveled out this week. The inventory did dip to just 15 homes earlier in the week, but rebounded to end the week at the same level as last week. I would expect to see the inventory level settle in around the 10 number range before the end of the month and heading into the first few weeks of next year. With the inventory level ending the week at the same level as last week, that has caused the turnover rate to drop back down below 100%. It is very common for the turnover rate to drop below 100 right before Christmas, even though it didn't happen at the end of last year. And I was surprised to see that we were able to get it back up above 100 for the past couple of weeks. So a little dip back down is really not alarming to me. I expect the turnover rate to start the year strong come January. With the market finally settling into the end of the year slump, it is no surprise to see that the over-under number has fallen back down below the over again this week. That number is just barely in the under range, with homes closing on average just about 1/4% below the asking price, or roughly $12,000. Or, sorry, $1,500. I think we'll see closing prices come back in the over very quickly into the new year, if not even sooner than that. The average closing price has remained at the same level this week as last week, right around just over $1.9 million. That is more than $225,000 over that average sales price at the same time last year. By the end of the year, we should be looking at a year-over-year appreciation in value of about 3%, which is significantly better than the market crash everyone was predicting back here at the beginning of the year. The stock market had a significant drop in value across the board this week. Wednesday, the Federal Reserve hinted at a much softer reduction in the discount rate in 2025 than everyone was expecting, and the stock market did not like that news. The QQQ fund was no exception to the reaction as it fell 4% Wednesday afternoon. It has since recovered slightly and has closed the week only down 1% from the close of last week. But this fund is usually a decent bellwether for how the tech industry is doing, which also dictates how much buyer interest we will see in our real estate market. However, this fund drop is more of a global reaction through the market as a whole and not an indicator of significant issues in the tech job market in the South Bay. And like I said, it's already starting to recover from this midweek slump. Interest rates bounced back up this week after 3 weeks in a row of steadily dropping. The national average is back up to more than 6.7% for a 30-year fixed rate. With the Fed talking about not lowering the discount rate next year as much as we were hoping, I won't be holding my breath that the mortgage rates are going to be coming down early next year. I think they'll stay up in this mid 6.5 range for the foreseeable future now. This is our last week for the current market updates for the rest of the year. I'll be back at the beginning of January with a year in review market update and then get back into the swing of weekly updates after that. But as we wrap up this year, here's the main takeaway for this week. The market has done well all year. Despite some hiccups along the way, we went into this year with everyone fear-mongering about how there was an impending 2024 housing collapse coming. And that did not come to fruition. It was definitely a slower year than we're used to, but total sale numbers improved over last year, and home values have improved over last year as well. All in all, I think San Ramon homeowners should be entering the end of the year holiday season very happy that they live in a community that keeps increasing value because of how desirable it is to call San Ramon home. Thanks for joining me for this last weekly update of 2024. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the notification bell so you can stay informed on how the market is gearing up for 2025. And if you have any questions about how you can navigate the stressful and confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Have a safe weekend, and we'll see you next year with a new update.